Good afternoon and welcome back. We're very grateful for this opportunity to study the market together and learn together. So we see this amazing, right? So yesterday, but Friday is close at 454. 455.50, and today is close at 454.50. 455.50 and 454.50. So it's just $1 different right there. But it's open at today is open at 454.65, and it's closed at 554.50. So if you compare the open and the close, so it's closed below that 25 cents below. See that? 25 cents below. This this right here, you see this is the open right there. We can fix that. We will fix that, put the open price, we put the purple right here so we know right there. So very interesting price action right there, right? So if we compare the close price today with the close price yesterday, it's exactly $1. You see that? 455.50, excuse us, 455.50 and 454.50. Yep, $1. But with the open, it's just 25 cents lower. 25 cents, 65, 50, I'm sorry, 15 cents, 15 cents right there. So basically it have a range right here, right? It come down and it take before that, let's look at the volume for today. The volume is very low. It's just this is 60-day volume average, and we see the volume is just half of that, more than half, 59, almost 59.5, let's roll up to 50, so it's more than half. So the volume very low today. Like we mentioned this morning, Wednesday and Thursday we have a lot of high or low or medium impact news, how we label this. It come out, so it may be the reason for it to go into the range today, right? Let's look at the 1 hour time frame so we can see the phenomenon right here, right? So right here we see is boom, and this right here a huge leg up, consolidate, another leg up right there, consolidate, another leg up right here, consolidate, and now it moving down, consolidate, moving down. So that's the trend we see, that maybe consolidate right here and it's moving down. You see it make a lower low right there. It break the market structure right here. Okay, it trip right here, break the market structure right here. For the market to go up, this they need to keep make a high low, but in this case it make a lower low. So let's see if it make a down move right here to confirm that's market structure shift, and then it will be a pullback around here and then it coming down. So that's what we anticipate right there. But we keep that in mind, that anything happen, right? We don't want to try to predict, we just anticipate, and we always leave everything open. That's why we can be stay nimble, we can stay flexible, right? If in case that we are wrong, then we can switch our position, so we don't have to be try to be right. Because when we try to be right, we attach our emotion in, then it's very, very hard for to be stay, you know, flexible and nimble when the market when the market proving to us that we're wrong on our anticipation there. So let's see. But as we see today, it's close below this level right here. This is a so-called bullish breaker, right? If you trade ICT concept, is a bullish breaker around here, and it's close below that. So let's see. When it start the week for this week, it already started below that breaker right there, and it's close below that. So let's see how tomorrow if continue below that level and create another lower low, then we know that we already have market structureship and we need a confirmation. Then we wait until it go back around that level and short them. That's our playbook right there. A typical, you know, checkbook setup right there. Okay, go back to the trade that we practiced this morning. This is 1 minute chart, right? So let's see. I think we do have a long setup or short setup. Right here. Okay. So, yep. So we have a long setup here around 0950. You know, some people, they just skip the first 30 minutes. They don't trade after, they don't trade before, you know, 10 o'clock Eastern time, right? Which is similar to the DR model, right? The DR model tell you don't trade for the first hour or so after 10:30, because you want to see how the DR give you the range for the day, right? It's the high of the day or the low of the day right there. So we see the setup, the opportunity or the market gives to us around 10. Excuse us, it's about 9:53, and we identify this level is a 4 breakout level. So we have a total sub level right there. So we put a buy stop here and hit our stop at what time? Yeah, 9:53 right there. So 9:52, when we saw it's moving down, we put the buy stop right away right there. We're gonna buy it, and we got hit, and it keep moving up right there, and the risk is very low. 12 cents, you see right there, 12 cent risk right there. And our target, just if we target just over 930, we have a nice, you know, 1 to 2 risk reward ratio. No, in this case 1 to 3 risk reward ratio right there. However, if we let it run up a little bit, it can run up to this level, which is the new week opening gap high at 455.10 right there. Yep, that's the setup we have for long setup. That's the first trade, and let's see what the second one we have. For the second one we have it a short setup. When we identify this level, right, it's on 5-minute time frame. We see the level with, you know, short entry right there. As soon as we see the up move here, we put a sell stop right there. So at what time? We got an entry at 10:11, but at 10:10 we put the buy stop. I mean the sell stop in, and we got hit right there. And then we see right here the very interesting right there. It retests at that level, and then boom, it going down. But the trick for us is that where will be our target, right? We try to put a target at the telescope entry long. When we in the trade, but actually it did not hit this one. It's just 3 cents above that. So in this case, we have to refine our target. It's 5 cents above this. It's better to do 5 cents above that, because the target is it's very tight. So that's an idea right there. So right here we have a very good note right here, right? We see the note right here at 10:15. We enter at here, right? At 10:11, 11, 12, 13, 14, 15 right there. The candle at the 10:15 hour touched the telescope entry level, and it's down close. It touched right, it hit that, but it's down close. It closed below that level. That gives us strong signal to go short right there. So we can add more into our short position if we want to. That's another trade idea when we get to the next level, right? Right now we just do a simple entry. But when we are good at what we are doing, we can do so-called scaling entry, right? So that means we add into the existing position we have. So that's another technique entry right there. Entry technique right there. And let's see what else we have from that trade. And we see that actually it did not hit this. It's just 2 cents above that, 3 cents above that. You see right here, the level is 25, the level is 22, it's 3 cents. If we put 5 cents above, then we got hit. Otherwise, we have to refine our target to just new week opening gap low. Then for sure we got hit. Then our risk reward ratio gonna be 1 to 2, not 1 to 3. I think we're fine with that, right? You got 2R for this. The other trade you get 3R, and you want to have 2R, you have 5R right there. Beautiful R right there. Because you know that for Monday it can be a very range day, and especially for the first hour or so. It's very range because it's breaking out big. That's the second trade we practice. Let's look at the third trade we have right here. You see that? So that is the move we're looking for. So basically we have 2 small trades around here, right? A long trade, and then we have a short trade right here. Then it set the tone for right there. So you see that the buy side of it was trap, and also the sell side of it was trap. As soon as we see that it go down and it take the sell side, but it did not break it, then we should put a right here we should put a sell stop in here. When we see this coming down, we put a sell stop. Excuse us, we put a buy stop. Then we got an entry right here at 11:06, and you see that when you get hit at that level, it never look back. So that's a beautiful trade right there. With how much it work, it never go again our position at all. You see, and it's a straight move focus, and we got a huge move, $1. So all of it is set up for this move right here. It sets the buy side set the buy side. We will trap for this move right here. The whole move to take buy side of the trap. So it's this should be a long setup, not a short setup. We misspell right there. We mislabel, we identify. It should be like long setup. It's a very low risk, right? 17 cents, and you got $1.15, so it's 1 to 6 risk to reward ratio right there. So far we have 2R, 2R, I mean 3R, 2R, and now we have 6R. So we have 11R right there. That's wonderful for us. Yep. So the first ray we got 3R, right? R. And second, we got 2R. So basically we use the percentage, the amount we reach for our account. Let's say 1%. Let's say maybe 500. We divide by the amount that we reach right there. So we come up with a number of share. That's how we do right there. And with a 6R. So total we have 11R right there. So this one we have 3R, right? The very first one. Yeah, long. No, it is short. We have 2R. Oh, no. We revise it become only 2R. Yeah. So level right here is even 2R right there. 54. So 2R. So the first one is 3R, and then this 2R. The first one 3R is 2R right there. 4, and I got one is 6R, so 11R right there. All right, what else we see? Because we try to build our system based on the low risk idea. That's the things. Okay, let's remove all the thing we do for today. This is open right here, and it move back and forth, you know, around the open price, and this close just below the. Yeah, it's close, you know, below the open, but it's close up, you know, between the range of the open, new wick opening up right here, right? We have a new wick opening up right now. That's the range right there. Here. Okay, let's look at other time frame to see what is the direction or the bias that that you know we may anticipate for tomorrow. Right, we did talk a little bit about when we look at the 1 hour time frame. All right, let's look at the 4 hour time frame. Yeah, before we go to 4 hour time frame, I wanted to revisit the 5-minute time frame. You see the DR model, right? After, you know, the first hour of trading, we have the range, right? Either this one will be the low of the day or this one will be high of the day. In this case today, neither of them. But you see right here is close above that, but it fell to reach, 0.5 standard deviation from the DR model right there, and it come down here. However, it did not violate, it did not take out. It's still close above the DR, implied DR low right there. So it's kind of tricky if it would trade the DR today. But the interesting part right here that you see that they all try to stay above the mid-range for London right there. So it gives you some idea that it's bullish, right? It never break down into the London mid-range or London low at all. So it's in the range, but it's kind of bullish right there. Now we can look at 4 hour. Okay, let's look 4 hour from here. So 4 hour. Let's remove all this bubble. Right, you see the range right here, the turtle soup level for short entry, and now it goes there. It goes there on Thursday, Friday, and today. Not Thursday, I mean Wednesday. We don't trade on Thursday, so it's Wednesday, Thursday. Go there, but it's still in this range from 449 to 450. What's this level? I think 455 something. 5643. So according to the chart, in order for it to be bullish, I think you have to break above, break and close above this level. But you can see that very interesting right here. I think we did talking about that before. So from the latest, this one, right, to this one, we have, let's see right here. So it's about 19 day and 83 bar. Okay, from the swing high to the swing low, so it's due for reverse is 7.2%. After that, it made a retracement or pullback right there, 4% pullback, right? It made 7%, 4% pullback, and then from there it made another, roughly 7%, 6.5%. And look at that, look right here, 10 day, but look at this momentum acceleration right here. Look at that, 25 day, and it made a 11%. Look at that. Only 25 day. This one is 10 day. Why is so big right here? It really, so from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So 21 days, something like that. Yeah, here it's a 25. Very, very close right there. So 10 day, it makes 7%, but this one 25 day, wow, about double. The acceleration is huge. So are we gonna short them? Because you see that it breaks the structure, right? Down, up move. It break the structure, the confirmation. Oh, we see that confirmation. We should short right here, and we mix that short on October. We made a short on October right there. We mix that. Yeah, we look at the. Yeah, we made a short right there, and now it's go up. You know, up now. The trick is that, I mean, it's very good location to go short right here. If we short right here, then our stop loss gonna be right here. If we do swing trade, right, so it's gonna be a good swing trade. If we put right here level, we reach $1 something. But let's say that do we have a 1-to-2 risk reward ratio? This level also important, right? Yeah, we do have 192. So if we do the swing trade, we have $1. $1.35. So we want to target $2.70. Oh, it's more than 1.2. It's $2.97. 92, more than $2.70. So should be a good swing trade with 1-to-2 risk reward ratio right there. If we wrong, then we can reverse. We can follow reverse. But all up here, we see that it consolidate right here. So it's gonna make a move. You're gonna make a move, continue to move up, or it's going to go here, or it continues to consolidate. So how many days consolidated so far? We see 1, 2, 3, 4. 4 days it consolidated so far. So we pay attention at this level and this level. So see when it break down those two levels right there. That's the good, trade for swing trade right there. And we already know that this week is only have 32% up. So it's just very low right there. So we have a good signal to short them right there. You see that it opened below last week, close right there. And also below the 30 anti-short right there. Yeah, very interesting to see. I think it's gonna come down. That's what we anticipate. But hey, anything happen, right? We always remain open. It's not about being right. It's just about, probability. How does the setup present a good risk reward ratio? We take it. We don't care about being right. Right? That is not what we're trying to do. Yeah, there's a quote from think right here. Yeah, we want to close up this review with the this way. We try to work on our belief, trading belief, and we add a lot so far from last time we talked. I think last time we talked we have about just 1, 2, 3 belief, but now we add more. Right? The more we read book or research. Recently we looked the book Way of Turtle by the guy named Curtis Faith. He's the most successful turtle. If you do research on turtle, challenge. I think it's by Richard. I forgot his name, his last name, but Richard something. Basically, you can read the book about market wizard, and you can know about Richard and the total program right there. Basically, we read the book and we see a lot of belief that we can adopt right there. One of the beliefs that really resonate to us, right? For previous research or book we read, they say that we can use either the two trading system we try to develop, right? One is discretionary, rule-based discretionary trading, and another one is mechanical or systematic system, right? Trading system. And this guy talked something that I think we need to adopt this. We want to try to adopt this belief. Basically, he said that mechanical system is the best way to make money consistently in the trading. Right? We know that our system make money over long run. It's easy to take signals to follow system during periods of loss. It's worth it to repeat that if you rely on judgment, which is the discretionary trading right there, you may find that it's fearful. Basically he say that if we have a mechanical system, we just follow the signal from the system, so we can detach our emotion. That's an idea right there. So we either build this mechanical system or we use other people's system. I mean, they sell to us a system, then we can buy the system. So we can mechanical, entry and exit without all little emotion right there. We not completely remove emotion from us, right? We are human. It's always there. We just try to minimize the impact of the emotion on our trading decision right there. And last thing I think is from this guy is very he said very true right here. We do not trade for accuracy, but we are trade for expectancy. By expectancy, he means that we follow system have positive expectancy. Accuracy, he means that sometime at the beginner or novice trader, we always very picky about the entry. We want exactly entry, and sometimes we miss opportunity, and because we aim for accuracy. But he said that we should not aim for and his name is Ed Coder. I think Ed Coder. Yeah, Coder. He's one of the legend trade. I think he's in the book of Market Wizard by Jack Swagger. You can Google on that and know more about him. Yeah, that's his idea right there. We do not trade for accuracy, but we do trade for expectancy. That's what it is. All right, I think we need to wrap up here. And thank you for your time and interest. We are really grateful for this opportunity. Thank you, and have a wonderful night and fresh start tomorrow morning. Bye for now.